Hey, this is Matt over at Epic Real Estate Cashflow Savvy, and we help a lot of people over here escape the rat race. And there's two ways that you can do that. You can do that by either increasing your passive income, and we do that by helping people purchase income properties. Or the second way you can do it, or the second way you can do it is work on decreasing your expenses, and we help people with that as well. And our big advice is always to start with your biggest expenses, and start there and reducing those, and just kind of working your way down. You know, Susie Orman would have you start with your daily cup of coffee. Let's preserve that. Let's enjoy that. Let's start with our bigger expenses where we can make a bigger impact right away. And then if we get down to that point where we got to start minimizing our coffee, that means you've done some great work and you've probably got enough money to enjoy that coffee anyway. So let's just start with our biggest expense in life, which would be your taxes. It's your tax liability. It's going to take up to 50% of your lifetime's income. So that's a great place to go to work to have a significant impact and an immediate impact on your escape of the rat race. So with it being fourth quarter, there's some things that you're going to want to do before the end of the year to really maximize your profit for this year. And so in the spring, when it's time to pay Uncle Sam, that tax liability is much lower. So I've got 5 tips for you. If you haven't started a small business, you want to do that. That's probably the number one tax advice or tax strategy, I should say, that any American can do to immediately reduce their tax liability. Because self-employed individuals, I wrote this down right here, so I'm just going to read from it real loosely. Self-employed individuals are eligible for a bunch of tax deductions, and a few of those expenses could include business-related vehicle mileage, shipping, advertising, website fees, percent of home internet charges that you use for business, professional publications, dues, memberships, business-related travel, office supplies, and any expenses incurred that run your business. But a lot of those expenses that help you run your business are expenses that you have already right now during or in your personal life. So you can kind of collapse those a little bit and get a bunch of tax deductions that way. The second reason for starting a small business, it just has to do with the way that Uncle Sam comes and gets their share. You know, as a W-2 employee, you make your money, Uncle Sam takes his cut, and you get what's left over. As a business owner, whether small or large business, you have the rights to the same advantages. Is you make your money, you go and pay for all of your stuff, and then you pay taxes on what's left over. Big impact to the bottom line. And thanks to my good friend Mark Kohler over at Kohler & Kohler, this is one of his top tax strategies for all Americans. So start a small business. If you own an income property, hey, you've already got a small business, so you've kind of killed 2 birds with 1 stone. So just know that. But go and discuss this with your CPA and make sure that's just going to be the right thing for you. And in most situations it will be. It just might be the way that you do it is going to vary. So starting a small business, that's number one that you can do this fourth quarter if you haven't done so already. Second thing is combine your vacation with a business trip. So if you've got a vacation coming up for the holidays or something like that, to see how you can put plan some business, meetings or research around that, and then you can take some of that vacation expense and take that as a tax deduction as well. You can really minimize the expense of your vacation. Third thing is sell losing of investments. If you have losses in your taxable accounts, you can turn those lemons into lemonades, essentially. Just cut your losses, cut those loose before the end of the year, and you can use those losses to offset capital gains in the new year. All right, and fourth is adjust the cost basis of your investments. Now what that means is a lot of people think that, say you have an income property and you blew an air conditioner this year and it cost, a couple grand to replace it. People look at that, wow, there just went a whole year of my cash flow, my ROI went down the tube. No, don't look at it that way. What you can do is you can take that and adjust your cost basis and offset, it's going to reduce your capital gain when you actually sell the investment. All right, so look at it that way. That's number 4. Number 5 is to buy an income property. You want to get one, or your next one, if you can get a couple, you want to do that by the end of the fourth quarter, because this is why. Because federal income tax rates, they vary, and it's possible to lower your taxes by reducing your tax rate. So the tax rates, they range from 5% to 35%, and the IRS assesses tax on income earned from work at an ordinary income rate of up to 35%. In contrast, a lower tax rate applies to income earned on real estate investments. So when you're starting to take your active income and convert it into passive income by purchasing income properties, not only are you increasing your passive income and helping your escape of the rat race, but you're also decreasing your tax liability. So you're really killing two birds with one stone. And that's why I like real estate so much, and especially income real estate. You increase your passive income, you decrease your tax liability, and it's also, you get all the benefits of running a small business. So if there's anything that we can do to help, and you've been looking into passive income, or maybe you got some passive income and you're a little bit frustrated right now, go to it's Investor's Guide to PassiveIncome.com. Mercedes and I put a document together that we give to all of our clients. You can have one for free. Go to Investor's Guide to Passive Income. That'll get you started to help you take the next step in your escape of the rat race. All right, so that's my tip for this quarter, or actually my 5 tips to reduce your tax liability and maximize your profit for this year. You want to get that done before the end of the year. All right, I'll see you next time. Take care.